What's going on, ladies and gentlemen? Welcome back to the channel for another market update. Hope everybody's having a lovely day. And with that being said, let's get right into the TA. So I'm going to start off by saying we have a rather conflicting setup. All right. And I'm also going to mention that, hey guys, yeah, we're going much lower, but like, dude, I'm not jumping the gun. I refuse to jump the gun on this short entry. I did that at the exact bottom. The last time I ignored technicals, I literally shorted right here because I knew that CPI report was, well, I mean, obviously I didn't know, but there was a very high likelihood. I think it was the PMI came out right before that was hot. And if the producer's price index, or PPI, not PMI. So if the producer's price index is hot, then that's expected to be hot, in my personal opinion. But either way, all right, like I didn't take gains here, and I ignored technicals. We had triple bullish divergence going on here. We had, believe we had bullish divergence. Yeah, we had a triple bullish divergence going on in the 4-hour time frame. You had a weekly bullish divergence going on here. You had your stochastic crossing up down there, like. You just, you had all the technical factors suggesting you had upside coming, but I didn't listen to them, okay? Now, although I know we're going to resume lower, all right, I'm not going to put myself through pain, all right? So, like, I'm still in some puts. I don't have the most puts, all right? But I do have 19 Jan 20 puts left for SPY from the 390s, all right? Obviously, we cut out the 395s, the December 30s that we entered there. Relatively quick. But yeah, this is the last of what I've been holding, and I've kind of like gotten in and out of a few of these contracts, but all in all, that's like what I'm comfortable with just holding right now. And I refuse to enter I refuse to load the boat. Okay, I refuse to load the boat when we have a triple bullish divergence going on. Okay, but again, we have a conflicting setup, so we are going to be going over that. And I want to point out that now we do, and since it is Friday, we're going to be going over the weekly chart, and we're going to be going over the monthly chart because it is the last trading session of the month, and the monthly time frame is setting up for something. Just like, I mean, I'm not going to say the weekly time frame is setting up for something. It's showing us we have a lot more room to go. All right, and now with the monthly candlestick, it's also suggesting we will have a bearish month next month. All right, we had this bearish Miami candlestick pattern. Well, look at that. All right, we had that, but then again, you need confirmation with candlesticks, and we got the confirmation. We didn't end up going lower. And if you come up and break that, if you have a close over this close right here, then it invalidates the whole candlestick formation. All right, so on these longer time frames, I really do have conflicting thoughts on these candlesticks. All right, candlesticks on the daily time frame, yeah, I agree. Okay, confirmation. All right, but what I've seen in this bear market from the weekly and monthly chart, all right, no, the monthly candlestick formation does not need confirmation from the next month. It just points to where you're going the next month, and so does the weekly. All right, look at that. You had the bearish Harami. Look at that. Beautiful. Speaking of Haramis, we have quite a few Haramis popping off today, which that is why I'm saying this really is a conflicting setup, guys. This is not what I want to see holding calls. But then again, at this point, I'm going to be straight up with you guys. I don't care if these calls die. I'm going to be completely honest, all right? It's literally whatever. It's not like it's going to kill me, all right? I just really want the short entry, all right? But, like, that's why it's super conflicting, and that's why I'm not going to sell the calls. It's whatever. If they die next week, it's literally whatever. I told you guys, like, yeah, I spent more money on these calls than I planned on doing at first. And yeah, I'm just, it's whatever, but that's why it's conflicting, because I will not re-enter the shorts until we get that. All right. So like, you know, like my pain has been cushioned here because like it's literally been made up for from the put side. But like it sucks. All right. This sucks that we have this going into next week, because now to me, it doesn't make sense. All right. And that is conflicting. All right. But with that being said, all right, now that you guys all know, hey, we have it really is very conflicting. We have several technicals not agreeing with each other. And we also have, we have candlesticks not agreeing with oscillators. And then we have FOMC minutes on Wednesday, which we all know what happened on Wednesday. But now I'm going to open you guys up to some possibilities. We're going to actually talk about some things in this video that's probably not going around the internet. Okay. I'm going to have, and yes, guys. Okay. Yes, this is a controversial. Is it controversial? All right. This is just something that's not going to be talked about right now. Okay. Maybe. Okay. Maybe, because everyone's bearish on the FOMC minutes. But here's the thing. All right. I remember Powell. I remember coming on here right after the meeting, or not his meeting, but his little press conference where he was answering questions. And I was telling you guys, hey, he was a mix of dovish and hawkish, but every single dovish thing he said got like literally drowned out by the hawkishness. All right, there would be a dovish comment, and then boom, hawkish comment would shove it right back under. But there were dovish comments, which was like, hey, we have data suggesting inflation is coming down. But he was then saying the war is far from over. I remember me, Kevin made a video, and he... I'm not calling you a permabull. Well, no, never mind. You are a permabull, me, Kevin. Never mind. No one can deny that. Me, Kevin is 100% a permabull. 100%. He's just holding his stock right now and just waiting for it to go up. This permabull status. But I remember he made a video, and he was just highlighting how Jerome, like everything he was saying, it's bullish because he's acknowledging that, hey, like, hey, we're finally doing something good, but hey, don't screw it up this month. This next few months, don't screw it up because we need to switch the trend. All right. And that's how he took that as bullish. I took that as like, hey, the Fed just told us we're going to have rates staying up above 5% for all of 2024. That's going to be an absolute collision course for the stock market. It's not going to be nice. All right, I've told you guys what happens, okay? Like, them raising the interest rates, that's one thing, all right? The reason the market goes down when they raise interest rates, market is future looking, all right? They price stuff in, all right? But the pain comes from just holding the interest rates there because that's when the whole financial system is under immense amounts of stress. That's when anybody with loans is under immense amounts of stress. It's when everyone is going to be in that state of panic, all right? That state of like, holy crap, how much longer can I take this? How long? But hey, we're going to take it because guess what, guys? We're going to be any pain that comes our way in the real life or in the real world, not the stock market world. The stock market world will take care of that pain for us because if gas prices go up, guys, making money off gas. I didn't make money off gas, but either way, if gas prices go up and that's an expense, hey, who cares? Because we're making banging bucks in the stock market, all right? Banging bucks. That is not a thing. Whatever. All right. So with that being said, with all that out of the way, let's get into the TA. We're just going to cover everything going from the monthly to the weekly to the daily to the 4 hour to the 1 hour. And then I'm going to put all of this together for you guys in a big picture point of view. And yeah, and I'm going to expose like why this is conflicting because it does suck going into next week because like, hey, I may have to change my thinking process here. But yeah, all right, let's get into it. All right, so starting off with the monthly chart, we have a bearish engulfing candle on QQ. We have a bearish engulfing candle on SPY. We have a bullish Harami candlestick formation on the VIX. All right, now what do you have on the VIX? You have your stochastic getting ready to cross up. All right, last time it looked like that. You had this month right there. You had this bearish Harami or bullish Harami candlestick formation right here, and boom, you popped off the following month. I do think that is in the cards. I think January is the month we go. Excuse-moi. I think January is the month we go way down. Okay, I'm not saying it's the crash. Okay, I'm not saying that. I do think there's going to be a 2008 or dot-com style crash. Or what was it, 1987 or whatever it was. There was a big one. I do think one of those is around the corner. I just don't have a crystal ball, and I don't know when it's going to come. All right, and keep in mind, things are going to be surprising. Okay, like when these type of events come out the woods. All right. They come out of nowhere. All right. They literally just walk out the woods and they're like, oh, we're here. And I'm just letting you guys know, VIX has been getting suppressed. This whole bear market, right? Why have we not had this? Even though we see the put to call ratio doing what it was doing, like absolutely insane. It was doing crazy things, guys. Absolutely crazy things. Let me see if I actually go like that. All right, we're gonna look up that put to call ratio, put call ratio. And guys, I have not found a trading view thing that matches what I see here on Y charts. All right, but Y charts, what I've been using, and that's what I've been checking. Just because, yeah, like what the heck is this, dude? What the heck? And you go over to like trading view. If you look up put to call, you can like there are things here, but it's like weird. It's nowhere close to doing that. All right. And also in the financial crisis back here. All right. Oh, yeah. Great financial crisis. 08 or 07 here. So right before it. Yeah, you had this enormous spike. So just saying, they are not. If you come over here. Nope, not that. I think we could do the 5-year for free. 2018. Do we have any spikes in 2018? Actually, you know what? Maybe it is pretty spot on. I don't know. I don't know. Point is, they're different, and I'm using this one. But yeah, guys, we have our second reading in 5 trading sessions. That is at historic levels. It didn't reach this in the... now, I can't show you this right now, all right? Because I don't pay for it, but I have seen it. And yeah, it's never reached the levels that it reached the other day. It's just, it doesn't, all right? Maybe I will pay for this. How much is this bad boy? Oh, we can get a free trial, guys. Oh. Maybe we'll have to pay for some Y charts. I'm going to have to see what else is on Y charts. I don't just want to pay for the put to call ratio. That would kind of... I mean, actually, if it's $10, whatever. I don't care. All right, so back into the charts. Now that we have seen this, and I'm just going to put this on 5 days. You guys can literally see, like, this really did happen. We had 2 enormous spikes here. That is redonkulous. All right, maybe it's not 5 trading sessions. Well, no, I think it was 5 trading sessions. 1, 2, 3, 4, 5. All right, so I guess it is 5 trading sessions, maybe. So maybe. I don't know. I don't care. Either way, you guys saw the spike, all right? When those spikes occur, all right, that is just showing that everyone is getting mega bearish, all right? When everyone gets mega bearish, shorts get squeezed. When everyone gets super bullish and complacent, like what we had going on up here, and somehow bulls were still coming out the woods, doubting, like, it was just stuff that was clear as day. Like, you had your 200-day moving average. You had trendline resistance. You had trendline resistance, 200-day moving average, rising wedge here with the breakout, with the retest here, golden pocket, gap fill resistance. Like, there was just an absolute crap ton of resistance up there. And you had the Dow with a 5 bearish divergence here, with triple bearish divergence on everything else. All right, that is not, you know. Oh, and then also I think VIX was doing something a little like that, or that happened right before that. I don't even know. VIX has been acting so weird, guys, so weird. But look at that, guys. So, all right, so we went over the monthly charts. Let's go over the weekly charts. All right, and like I told you guys, we have so many haramis on the charts today. Okay, so we have a bullish harami candlestick formation happening right there. If your CCI hinged up, you have your stochastic crossing up as of right now, and you have your RSI also hinged up. Going over to SPX, you have your stochastic avoiding the cross. It was crossing yesterday, now it is not. You have your CCI hinged. Come over to SPY. Okay, and keep in mind, you fell this week off of declining volume. You've had these moves off declining volume, which is why, like, we're going to be talking in this video about what we're going to be talking about, which is like, hey, something like the people aren't looking at. Okay, we got like we did. We got 2 months back to back where we had lower than expectations on CPI. That is literally exactly what I told you guys we need to be looking for. All right, but again, I also told you guys this is not over. Okay, it very easily could turn back up. All right, like that literally happened back in the Volcker era. Okay, several times throughout like a 10-year period, it just kept going back up. They kept raising rates, doing what they're doing right now, and then like over a year or two, they lower the rates, inflation comes back, and then boom, Volcker came around and just had to Volcker the market and bring rates up to like 18% or some crazy number right there. Like that. And I honestly, I think these upcoming years are going to be somewhat similar. All right, someone said something yesterday about how we've already no, he was responding to me and said the S&P 500 has already taken a 25% haircut, and he was asking, or he or she, I don't know, they're asking, hey, is this doom and gloom that the market's going to zero? Is this all fugazi? Yeah, it is all fugazi. This is literally how people get rich in the markets. Everyone gets all their emotions involved. Everyone sells the bottoms. Everyone buys the tops. And then, yeah, they get mixed up in the middle of things, where us traders, this is where we are, all right? And I like to think we're on our path to greatness here as traders, all right? We're on our path to just not making mistakes, all right? Always being on the right side of the trade. All right, now something else I want to say right now, all right? On all these call buys, all right, every single one of them, I had like very quick opportunity to take like decent gains. We'll say 30% gains. Literally all of them, all right? Actually, except for the first one. The first one was I think that was a complete miss. No, it was not. Look at literally what happened after I made the first buy over here off this gap fill. You had that right there. You came back, tested it, and then you had that, all right? But yeah, the whole not taking profit. Okay, now I will not be playing the counter trend move anyway. So like that is golden rule right there. But something I definitely could have put into practice was like, hey, you know, you're playing a counter trend move. You know, the market doesn't go straight up. You know, it goes in zigzags, just like what we got going on here, which I think I do think we are flipping the support zone right here. We came to the bottom of it. Now we're flipping the top of it. I think we are going to be going our way. We will get into that though. But again, I mean, we have the VIX doing stuff that just like candlesticks rule, and that sucks. All right. And like I was saying, you have a divergence here between your oscillators and your candlesticks. All right. QQ here, you have your, oh, actually, no, you do not have, well, you have right here, you have your triple bullish divergence. So that is a thing, but you have your stochastic crossing down, you have your RSI hinge down, and you have a bearish Harami candlestick formation on the daily time frame. All right, that is not ideal. All right, not ideal at all. You have SPY. All right, you have the same exact formation. You have the bearish Harami candlestick formation. You had a green day followed by a red day, an inside red day. Let's see what we got on DIA. DIA. Now this is something I saw on Twitter. This little flag we got going on here, and I don't know if it's going to end up playing out, but it could. All right, it could be the precursor of like, there's no counter trend rally and this thing goes straight up. I don't want to scare anyone, but like straight up, if I miss the move, I missed the move. All right, like I'm doing what I think is right as a trader, which is waiting for the right entry. Last time I ignored technicals with a daily setup like this, I got creamed. All right, I literally got creamed. But then again, I do believe we are in this phase right now, but we never actually got that counter trend move. All right. We literally never got it. All right. We kept moving down. All right. This was all one big leg down. We are probably going to get a wave 2, which would be your like counter trend move. And then you're going to have a wave 3. And then you're going to have your other counter trend move. Maybe we come back up here to lows and flip that. And then we come down here to our bear flag target. I don't know. But either way, guys, the market moves in waves of ABC waves, or it moves in 1, 2, 3, 4, 5 waves. All right. You got your impulsive moves. You got your corrective moves. All right. This is very clearly an impulsive move, but like I'm looking for the correction and we are not getting that. All right. We're just not getting it. Maybe we do have an ABC move here. Maybe it's something I completely missed, but yeah, no. Maybe this is A, B, and then we're about to get C. No idea. And guys, I don't put Elliott Wave in my analysis because I'm not too confident on my Elliott Wave. There are Elliott Wave YouTubers and people on Twitter out there who honestly blow my mind, all right? And they literally have TA that agrees with my TA, and I try and do Elliott Wave, and I've been trying to like put it into practice, but like, hey, this is stuff that takes years and years to develop. This skill set is a crazy skill set. All right. I mean, obviously we've sped up the I guess the technician skill set here. Actually, I guess Elliott Wave would fall into that. But either way, all I'm saying, guys, is I'm not going to put it in the analysis because I don't trust it. I think it's much more accurate to do what we've been doing. All right. And all in all, when I do Elliott Wave, typically the oscillator's got my back. All right, that is typically what I have been noticing. But yeah, I do think we came back down here and flipped this. And again, just another example, I didn't take profits. I was up like very significant yesterday. I was up like 40 to 50% in one day. So sexy. All right, it was dope. All right, but we got this. All right. We got this. All right. And like, that's why I was saying, I don't care what happens to calls at this point. All right. I have some puts, so it's not like I'm just going to be left on the side. I don't think my account's going to get to 100K if we end up doing, well, I'll tell you right now, it's not. Math just wouldn't work like that. I don't think it would. But off the top of my head. But in the end, it's okay. All right. I refuse to get wrecked. We have FOMC minutes coming out on Wednesday at 2 p.m. Eastern Standard Time. All right. And here's the thing about those guys. Everyone's expecting it to be a bearish catalyst. All right. But like the charts are setting up bullishly, and they're setting up to fall into tomorrow, which is actually Tuesday, which is the day before that, which means like maybe we end up getting that. But again, keep in mind what I just said. Like this could be the ABC move. That could be our corrective move. And then we could end up, popping off to the downside off of FOMC minutes. I don't know. Okay. Maybe these candlestick formations that we're seeing are just going to completely not care. But also keep in mind what I just said about the daily candlesticks compared to how I look at the weekly and monthly candlesticks. I don't require confirmation for the weekly and monthly candlesticks. I require confirmation for the daily candlesticks because, yeah, I mean, in this market, candlesticks do rule. In this market, I have to tell you, their SPY and QQ have had plenty of psych outs over the past few months. So, yeah, confirmation is key on the daily time frame, and I guess all lower time frames, the confirmation is key. But again, for the monthly, I'm not going to use confirmation on those. But yeah, guys, all right, everything is like I said, it's conflicting. Also, guys, let me know if you do enjoy the look of today's video. I did take out the, like, we still have extended hours on, but I noticed in someone else's video that he didn't have it on. So I started, it took me like an hour to figure this out for absolutely no reason. I could have just Googled it the whole time. But yeah, I did event, maybe it probably was an hour, probably was like 20 minutes. I don't know. But yeah, we have no session breaks now, or no like pre-market, post-market. Like we still have the candlesticks forming here. We still have the oscillators, but we do not have the lines that would just look ugly. And now we have this sexy looking gradient here. All right. And let me take off the golden pocket because it already served its purpose. There's no point to it. All right. And keep in mind, guys. All right. I told you guys I saw that thing on DIA. All right. But this is actually, after I put that on my chart, I just started looking through the other indices. We actually have like almost the same exact thing on SPY. So this is why I'm saying, like, hey guys, maybe this is going to skip the counter trend. I have no idea. But again, I'm going to do what I think is right as a trader. And I'm going to wait for that counter trend move to be re-entering. All right. Like, or at least like loading the absolute bow. And yes, guys, I will load the absolute bow. If we do get that counter trend move up into, I mean, I told you guys, I'm going to start first 1/3, 387.86. The rest of the position literally gets loaded in this range. Okay. I don't know. We don't have any news on Tuesday, but again, I mean, if FOMC minutes are going to be bearish, then it makes sense that we rally going into them. And I really do believe one of these two levels is going to be hit before we end up turning down. Keep in mind, if we do get up to this 390 area, guys, I'm entering at 389, guaranteed. If we do end up coming up to this gap fill or this trend line resistance or the 200 moving average resistance, yeah, guys, I'm going even heavier on this, heavier than I planned, because this is going to be an absolute section short. I'm going to be using February 17 puts, all right? And then I'm also going to be pairing those with, I think I'm going to probably go like January 30 expiration, if that's the thing, just because January 20 is going to have like 15 days on them or something like that. Which just, yeah, that, I mean, wouldn't be ideal. But at the same time, if we do end up getting the counter trend rally, that's the only time I would be comfortable taking those. I mean, honestly, taking any puts, but taking those shorter dated puts, last time they paid off so freaking significantly and made my gains so much more than what they would have been just because I had the December 30 puts and I got to catch these two down candles here with them. Unfortunately, I started taking profits way too early on that move. But either way, all right, that's just what you got to do, okay? It's what you got to do to play things safe, all right? I'm learning the game. I'm a newbie trader. I'm not going to say I'm a newbie trader, all right? But I'm definitely within my first 2 years of trading. And, yeah, I mean, I'm only going to improve as we go. But keep in mind, like, I'm not one of these people who are 40 to 60 years old who can come to you guys with 20 to 40 years of experience. I can't do that, all right? But I'll tell you right now, all right, I will bring all my experience to the table each and every day. All right. Unless something pops up, of course, then you can't do anything about it. It's just that. All right. But going over the 4-hour time frame now, we still have the same thing going on here on QQQ. You still have you have a triple bullish divergence going on QQ. It never ended up completing. All right. But like I did just say, I do think this is going to be a ABC corrective move to the upside. Maybe we end up stalling out at literally our trendline resistance here from the bottom of the bear flag. Maybe we end up doing that. I have no idea. But like I said, I'm going to be watching SPY. All right. Just because those are the puts I'm going to be entering, because SPY has not fallen nearly as much as Qs. All right. And I much rather make a lot more money on SPY than get Q. But keep in mind, tech will probably crash more. So even though like we see QQQ has fallen more than SPY, it still probably will produce the same amount of gains. I'm not going to lie. But I like SPY. I like charting SPY. So I'm going to be doing that. Look at this. Look at just such nice patterns on SPY. Everything is just, it goes exactly according to plan. All right, it's beautiful. But yeah, either way, you do have your 4-hour CCI down here, and you were crossing up like literally an hour ago when I looked. You're not anymore. All right, you continue to move down. Let's actually see what's happening on the 3-minute chart. Look at that. We're making a comeback. QQ's only down 0.80%. Nice, 0.8%. That's sexy. All right, it's not sexy. I mean, this sucks. Let's see if we actually break over this. I didn't see this, but I mean, it looks like we have been we rejected off here, here. I mean, you just got your first break. Maybe this is going to be the move of the day going into power hour. It's 3:12 p.m. Eastern Standard Time right now, so this is what we're watching. But yeah, let's finish up with the 4-hour time frame so we can discuss what we got going on. All right, so, and look at that, dude. You do have, oh, maybe I was looking at QQQ. I don't know. Either way, look at that. You're literally getting 2 solid 4-hour candle, like bottoming tails here, right on that the flipping of this support zone that I was talking about. And honestly, guys, I still say the likely scenario is that we do rally into the FOMC minutes, and that is the catalyst that ends up dropping us. Okay, but keep in mind, guys, okay, keep in mind, if the charts are all the way down here, all right, and you have QQQ, all right, keep in mind we can form the bearish divergence, or the bullish divergence. We can do something like this and then pop up. We have like something like that, and then you go like that, and then you go like that. We're gonna form something like that, form our bullish divergence that would give us a bottom. But all right, your weekly CCI is already down here. You're starting to hinge up. All right, I would not be surprised if you still see that little short squeeze come in. It's not like hopes of a short squeeze. You have fuel for a short squeeze. There is literally historic amounts of put volume going in comparison to call volume. And we know this is an options market, a derivatives market. So it's not like there's less option volume than was historically there. No, there's more, guys. There's more. So, I mean, you got the charts suggesting like you're probably going to get a counter trend move. All right. Well, not probably. You're suggesting you're in store for that counter trend move. And yeah, you got the perfect catalyst next week that you could rally into, and then boom. But here's the thing. You would need to have one heck of a rally to get that counter trend move before that. All right. And like I said, the minutes, they could be bullish or bearish, guys. All right. They could be bullish or bearish. Okay. If the charts don't change, and they stay looking how they are, if they stay, like, I'm not going to say I'm bullish, right? I know we're going much lower. But again, I'm not going to put myself through being down 50 to 70% on my puts if we end up getting a sick, nasty move all the way up here to my target zone, all right? Actually, I probably would not be down 70% on the Feb 70 puts. But either way, I'd probably be down 30 to 50% there, and that would just be another rep in my book of sloppy trading, and I don't want those, all right? I just don't want them. I want as many reps of perfect, clean setups as I possibly can get. And I will, guys, I will be applying stop losses, all right? I will, from now on, I will be identifying levels for stop losses. Well, not unfortunately. I mean, it's a skill that I actually did pay for, all right? I'm not going to say whose course I took, but I did. I took a course specifically because I want to, and that's what I did today. I was watching this course, and I was practicing these on my charts. And guys, this is literally how I built my skill set, all right? I am a huge advocate for paying for information. Like I just said, all right? I'm not one of those 40 to 60-year-olds who can do that, all right? Go find them on YouTube. I'm not going to say any of them. There are so many freaking 40 to 60-year-olds that I have learned from that I'm serious. They have provided a shortcut to TA just because I paid for information. And there have been probably 10 courses I bought in this whole time, all based around technical analysis, all right? And that's just because, hey, different people have like different skill sets, all right? And like, if like I don't have that whole, like, I'm working on the trade management, guys, but straight up, like, not knowing how, like, I know how to apply a stop loss on an option, but like, no, like, it's just not something that like rings a bell in my mind. And like, I mean, now I'm going to be attempting to pick this habit up, right? The skill set up, the stop loss skill set. But all in all, guys, it's not something that, I mean, I have been just winning. I have not really had losers up until now, on this call side here. So I haven't really needed one, but yeah, no, it should not be, avoided. Like I said, like if I had gotten out at a reasonable spot on the first calls, I don't think I would have made 2 other call purchases and ended up 15 grand on a trade that I planned to be like 3 grand. It wasn't supposed to be a lot. But yeah, all in all, guys, that is something that I will be bringing to the table from now on. If I am doing a oh, here's the thing, yo. Like, here's the thing. If I get a supreme short entry, I'm not gonna want to put a stop on that thing. It's oh, but I guess that's the point of the stop loss. I don't know, dude. I don't know. And that's why I'm saying, like, I've been winning because I've been only taking these clear as day obvious setups, like this bad boy right here. This bad boy right here. All right, which I will say right here, I did not end up catching this one massive sweet bejesus move. All right, I ended up getting some plays in this area because I was too stubborn and just held on through puts through all of that pain. For absolutely no reason. And that was just another example of like, hey, I ignored the charts, what they're telling me, and I suffer the consequences. Okay, right now I'm not ignoring the charts. I refuse. All right, and if I suffer the consequences for listening to charts, like, fuck me. I don't know. I have no idea. But either way, guys, we got this falling wedge. You also have this bear flag. You got FOMC minutes next Wednesday. You have one trading session in between now and then. All right, they do come at 2 p.m., so we can rally up into them, and maybe we get a topping tail. I don't know. But again, if we don't rally into them, guys, I'm going to have to say that, hey, charts will prevail. Charts will predict the news again. And we're going to rally off FOMC minutes, all right? And that's the controversial thing that I was saying in the beginning of the video that, like, hey, people don't want to talk about, like, hey, the charts are doing what they're doing now. Maybe we do end up getting that little pop off them that ends up giving some light to what the daily charts got going on, the daily and the 4-hour time frame. And then, like I said, like the VIX has a bullish Harami candlestick on the weekly and monthly chart, which suggests, like, guys, next week is going to be the week that kicks off this next downtrend. So, like, yeah, that's why I was expecting this violent counter trend move, right? And Apple, guys, we discussed Apple yesterday. Let's actually take a look at it. You did end up doing that, all right? You did end up hinging back down. You did not invalidate your bullish Harami candlestick, though. You have a hangman candlestick as of right now. But, wait, am I bugging? Oh, but now you have a bearish Harami candlestick formation. So this is what I was saying with all the Haramis popping off all over the place. There's so many of them, guys. IWM, bearish Harami candlestick. DIA, no. It's just a hangman candlestick. Hangman inside a bearish Harami candlestick. Like, I'm just saying, guys, it is all over the place today. So it is really going to come down to, like, hey, what do we do going into the FOMC minutes? Okay, like, straight up, we are in a point in the market right now where I can't say with certainty where we're going. I mean, obviously, there's never certainty, but like I'm saying, there's not a clear picture of where we're going right now. My bet is to the upside, but I also told you guys I'm perfectly fine if those calls just go to zero next week. Like, I'm so over the whole play the counter trend move or attempt to play the counter trend move. I'm over it. All right. So I don't really care about them. And like I said, it's whatever. There are still puts there. Not nearly as many puts as I really want. I really want so many puts, guys. I want to go so heavy on puts. But again, I'm not going to expose myself to the risk of one massive short squeeze with the put call ratio spiking to historic levels within 5 to 6 trading sessions. I'm not exposing myself to that risk. I refuse. All right. So I'm going to go with my gut here. All right. I'm going to hold the calls. Not going to enter my puts today. All right. I'm going to wait to see what happens with the minutes. All right. Or to see what happens going into the minutes. If we do rally into the minutes, I will be entering some of the puts. Or all the puts, depending on where we are going into it. But I mean, we're not even close to this level now, so we're going to need to see a $10 move to get up there, all right, or an $8 move to get up to my first short entry there. So that's why I was saying, guys, it's conflicting, all right, it sucks. And keep in mind, DXY is also it's calling BS on this sell-off we got going, all right. DXY moves opposite to SPY and QQQ. It moves opposite to the market. Why is it down right now? All right. Just saying. All right. It's got some room to go. All right. You do end up reaching this oversold territory on your RSI in the daily time frame. Maybe we are going to end up doing that. Maybe we end up popping up right at the apex of this wedge we got going on here. I don't know. All right, guys. So I think that is pretty much it. With that being said, I will catch you guys in the next video. Peace.